Hey, what's going on, guys? This is Terrence Ray, and I'm back at you with another stock market update. This week, the bull run continues for the most part. What I got on the screen is a chart of the SPX, and you can see that from Monday, which Monday the 11th, you can see right here. So if you go look back at last week's video, we were sitting right here. We had an up day, another up day, three, and then on Thursday and Friday. Kind of looks like we hit a little stall, right? So I'm gonna zoom out and show you why the stall happened. This is a monthly, a 20-year monthly. So this is a very large chart. Covers a long time span. Now look, here are all-time highs back here, and this was what this looks like 2021, and that's going to be the high of 48.18, and that was in December of 2021. So we are right here at that. So and that's why you're starting to see it stall a little bit. Now I do predict, this is just my own opinion, that we will blow through this. Now this is a monthly chart, so this candle right here is a monthly, and you can see if you've been keeping up to date with these weekly videos, you'll see that I went over this pattern right here. This is a bull flag, a classic bull flag on a monthly chart. So this is signaling that we might be in the beginning stages of the bull runs, the end of all bull runs, to be quite honest. So I expect this candlestick by the end of the month to take this out. But that doesn't mean that it can't, because it's gonna play out for, what, 15 more days. So that it could stall a little bit, possibly, and then take off. All of that is possible, right? It could stall a little bit and then, finish out the month higher. Or it could just stall right here. Like if it didn't do anything else and just chop for the rest of the month and stayed right here, it will still be a great month, if you're long the market. So let's drop back down to the daily, and I can tell you what I think will play out for the week. Do your own analysis, but this is what I think. For the week, I do think we'll get a little chop. The expected move for the week, if we come to the option chain, the weekly expiring options on Friday, we have $44.37, which is a very small range. It's not a wide range. And so that just has us, maybe chopping around here and then pulling back. I think we'll get a little chop in the S&P 500 as a whole, right? Let's take a look at, so to go back before I leave here. With the S&P 500 overall, I'm still bullish. I own this in my 401k. I own the SPY, and I'm adding to it, right? I think over time that it's just going to continue to go up. We will get some pullbacks, I think, at some point. you know, this will pull back. So I'm not going to be alarmed, to be honest with you. I think that even if it pulled back and goes lower, I'll probably buy, into it. Because on a larger time frames, it just looks like a great bull chart. Now, let's take a look at some of the things that I've been going over the past few weeks, and I've been giving out levels, and just about everything on my watch list has been hitting those targets. So we're gonna go to my weekly watch list. We'll start out with MGM. I think I just added MGM here last week. And if you're looking at MGM, to like take a look at this. This is you can see right here. I threw my Fib retracements on, and I put the extensions on. Right, hit the 61.8. Boom. Last week when I talked about it, this was Friday's candle, and I told you guys I would be looking at this Monday morning. Right. Look what happened Monday morning. Look at that big green candle. Already hit that target, then chop on Wednesday. So you got Monday, excuse me, then Tuesday chop, then Wednesday, you got this long wick pushed above, and then on Friday it pulled back a little bit. So I do suspect maybe we'll get a little bit of chop in here, But my next level that I see MGM getting to is right up here at 47.80. You know, the it has an IV rank of 23.8, so I don't know if you can really get anything selling options in this. And it looks like they opened up some more strikes, so that's why you don't see the expected move in here. Um, let's see. Let's take a look at 27 days. Now you have one at 27 days, got $3. If you go to 62 days, let's see, 41, you got a little under $3. So you can see that I would guess that the expected move for 34 days, once they um, update the strikes Monday morning, it'll be somewhere around $3 or $4. I say three, and that'll put you where right around what 46. So we could get a little chop. Um, really, I wouldn't sell options here. You could sell maybe the 42, this 42 strike, this 37 delta. I don't know how much it margins, and margin you about 752. That's not bad. I probably would sell the 46 delta, sell it right there. Pick up 150, or um, could be a good covered call candidate, or you could just buy the shares outright. So that's the level. My next level, take profit level for MGM is right here. Let's go take a look at XLU. XLU, um, it already blew through the 1618 and blew up to here. Can it make it back up to 67? I think so. I think it'll make it up here to 67.30. It may go all the way. With the way the market is looking, it's possible for all of these, everything on my weekly watch list, to be honest with you, I think will probably make it all the way up here to the 4.2, the 423.6%. It'll make it all the way up there. That's what I think. Let's see. Let's take a look at MPC, Marathon Petroleum. Now, I just added this, I think I don't know if I don't have any levels for it yet. The reason why I have Marathon on here is because of the range. It's in a range. And you can see I have the trend lines like put on here. It's just chopping. And what I think ultimately is when it comes out of this range, then we're going to get some real fireworks. Let's look at this on the weekly to see what it looks like. So I'm going to go out weekly, go out, let's go 3 years. Excuse me. Now you can see it made its high here, high, low, then a higher high. I actually, to be honest with you, this could be a short candidate. It just depends on which way it breaks out. If it breaks out to the bottom, now it will be tricky. And you can see my squeeze is coming on here on this indicator. When I see these red dots mixed in, it just lets me know that it's that price action is basically contracting without getting too technical. You can Google this indicator, and it's comprised, I think, like of the Keltner channel and the Bollinger Bands, and when they're compressed, basically you see the red dots. And so you can see I got two red dots right here on the weekly. So that will put me like these two are right here on the weekly. So basically 10 days of trading in a range. If I go back to the daily, we can see if we count it back like what 2 weeks, we'll be somewhere in here. We'd be in a range. So we want it breaks out of one of these ranges, you know, it can go real hard, right? So whichever direction. The only thing about it is if you wait for the breakout to the upside, you're gonna give up $12. If you wait for the breakout to the downside, you'll give up $12. Now we got a gap up right here and a pullback of this candle. This is what I've just noticed this looking at it. I'll probably put my retracements on and then see, right? What I would like to see here is another up candle, or Monday or Tuesday, come take this high out. If we get it to take out this high right here, might not be a bad idea to take it to, right up around here. So that might be like an intraday trade. So let's see. So I'm just gonna watch that. I'll leave that there. I save this chart. Then we'll continue on down UBS. You see UBS is reacting beautifully. Every time I come and do an update, a weekly update, UBS is going higher for the week. Think last week, where are we? Monday was like right here. Then you got Tuesday, then Wednesday, boom, gapped up over this level. So once it gaps up over my level, then the next one comes into play. So the next one after that is 3150. So at this point, now it is overbought. I can see the red over here on the RSI showing 70.6, but it's just but overbought. But this is one of those stocks that I didn't think it would move this fast. It's not a large stock. If you own the stock, may not be a bad time to be selling calls against the shares that you own. Bristol Myers, Bristol Myers. I think I did Bristol Myers. These levels actually came from an intraday. I actually was down here on the 1 hour, I think. Let's see. Yeah, I was down here. I did this on the 1 hour, maybe even the 30 minute. Let's see. Let's go down to the 30 minute. I can tell. Yeah. So I did Bristol Myers actually on the 30-minute chart. This was an intraday chart. And you can see it's hitting all the levels. Hit 618, 100, 1618. Look right up here at the 2618. Hit this level right here at the 3618. Look at it. You got one more level. I never hold to the 4618. Sometimes it hits it, but I normally take profit right here. So we got one more level left, which will put it right around 53.10. So I'll probably take profit at 53 bucks if I was trading this. So I think I did trade it way back here, but as you can see, um, we got another level to go. All of these setups for the most part are bullish because of the overall market. That's why I get an overall direction on the S&P 500, and then you come look at your other, come find other stocks to trade. Now you can look at this. You can see how it's reacting every time it gets to one of these places. Let's pull PayPal back. Now PayPal, in my opinion, is a great long-term hold. I think it'll actually, because you got a gap right here. See, with this big hole, I think that PayPal will fill this gap, and you even got a bigger gap. Well, not a larger gap, but this started the downtrend up here. So if it's going to fill this gap, then that means it's going all the way to like 80, 84, $85, possibly. And it's only at 61 bucks right here. So this is a great long-term candidate, in my opinion. As you can see, it's breaking this little right up here with this resistance. It chopped around and then broke through this big green candle, pulled back a little bit. Let's see if we get another move higher. Next level on PayPal is 70 bucks. I would be if it wouldn't be a bad place to take profit at. Let's see what the RSI is. It hasn't even gotten overbought on the RSI, so it still got room to run before I think that we'll get a significant pullback on PayPal. IWM broke out of, let's hide these, let's make it clear. Broke out of this little pennant right here. Now this is what's really propelling the market here. Your small caps break out of 100, the 100 fib level, blew through 1618. Next level on IWM is right up here, 203.37. So that's your next level. Call it 203. I think it'll get there. I don't know how long it'll take. Let's look at it is overbought. So at some point, I expect a pullback. And let's look at Honeywell. Look at Honeywell. Now, Monday, last week when I talked about Honeywell, it was like right here somewhere, I think. Excuse me, it pulled back a little bit, then took off again. So we can remove that. Well, I'll leave it up. So we can see the next level up here is your 1618, and that will close this gap. So I do believe Honeywell will continue to go. That's another 5 more bucks up to the 1618 level. Caterpillar, look at Caterpillar. Man, these levels, I'm gonna have to applaud myself for this because these it's right on. You can tell right where it's respecting the resistance at right here. Now, it does have an 81 on the RSI. So at some point, this is gonna pull back. But I do have levels higher. So this is, we're getting into the land of where like at some point it's gonna pull back, right? But I don't know when. So if it was me, I would take profit, especially in Caterpillar. If you got in way back here, you know what I'm saying? I do think it's gonna keep going. Even if you hold it to 320, you got another 35 bucks on that. I would start selling calls though. You got 100 shares, you got a large enough account. Now sell calls against the shares that you own. Be careful, it does have a dividend coming up. So make sure those calls are out of the money. So I'd be let's see, they opening up more strikes there. Let's go to 41 days. Yeah, if it was me, I'd be out here selling calls. I'd be all the way out of the money. I'd probably be coming out here one standard deviation, selling them at the 310. Let's take a look at, and that's a beautiful chart. I mean, it's right there. Let's see. Let's go take a look at XBI biotech ETF beasting. Next level up, 91 bucks. I promise you, every time when I'm coming out here doing these videos, go look at last week's video. Look, it was right here at the 100. It blew through the 1618. Now it's chopping a little bit. We could get a little pullback. And then, just the rubber band just pulling back some so it can take off again. And if you look at, I mean, it broke higher on, look at the volume candle right here in the background. You can see the volume levels went higher as it's going higher. That's a great sign letting us know, hey, that it's continuing to shoot higher on increased volume. Buyers are coming in, and with those buyers coming in, it's increasing the share price. Let's look at Tesla. Look at Tesla. Tesla, we finally got the break out of the range. It was trading in the range, and we finally got that breakout. You can see the squeeze down here at the bottom. See, we had 1, 2, 3, 4, 5, 6 red dots. So it was just coiled up. And now you can see Tesla breaking higher. Now, me in Tesla, one thing, what I did do in Tesla was I did put on a call spread. I bought a call spread and I targeted this 267 level. Well, actually my short strike is 265. So I came out, what I'm at, 41 days. I bought the 260, sold the 265 because I think it's going to get to 267, but there's no 267 strike. So I wanted my short strike where I think the stock will go. That's a $5 wide spread. And I'll make money if the market makes it up there. So that's a cheap way of playing Tesla without having to pony up a whole lot of money and take a whole lot of risk. One of the reasons you might ask, why would I buy the call spread out of the money? Most of the time, I'm doing one in, one out. Well, and also because I can make more money. I'm pretty confident it's going to get there. I don't know for sure, but I'd rather the further you go out of the money, the lower the probability of winning the trade, but you can make a little bit more money. And also, I chose 41 days instead of 34 because I wanted to come behind earnings. So you may say, why come behind earnings? Because if I'm wrong, let's say I'm wrong and Tesla just turns around and starts tanking, right? Now, obviously, I'll lose money on the trade. Well, instead of closing it out, I might hold it through earnings, because you never know. Earnings may blow the trade out to my advantage to where I needed to go. Now, obviously, if it goes there before earnings, I'll take my profit and roll on. But if not, then I would like to have the opportunity for earnings to, maybe get me there. So that's why I chose to go behind earnings. Boeing, Boeing is a monster. I bought some Boeing in my 401k. If you look at Boeing on the monthly, look at this. Like, this is a perfect setup. Like, this is perfect. Probably the best chart I've seen um in a while. Cause this is a monthly chart. Like, if I was trading this on a daily, I would, I would like it. But I like it even more on a monthly. You just got to be patient, because I imagine it gonna get some sideways, maybe some pullback, but that's fine. I actually think Boeing will make it all the way up here to about 374. We'll call it 370. That's another $100 from here. So, and this is a monthly bull flag. You can't beat that. Best chart I've seen in a while. So, and then in phase, I talked about in phase. I think I posted in phase on Twitter. I think I'm gonna have to update my levels, but this is bananas. It gapped up over my where I thought it would go, and I'm gonna show you guys. So, like on last week, in phase was down. Right when I did the video last weekend, you can see it pull back. Look at it on, I think that was Wednesday. Big green candle, gapped up over the 100. Now you sitting right here at this trend line. Now a lot of people make fun of trend lines, like, it's just. I've heard one guy say voodoo or whatever. You can't tell me you don't see that we got this red candle right here at the trend line. Now, what we want to see, just like here, just like on Tesla, we want to see it break through here. I would like to see it pull back and retest and then go again, but it may not. Like, it gapped up over here. We could see next week it could come here and just bolt higher, right? In phase is actually one of the ones that, I mean, you got a gap here, you got a gap here, here, and here, and here. So it could be going up for a while just to fill these in. So that this watch list, I got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 things on it. Hey guys, first of all, hit that like button. Hit the subscribe if you haven't. Um, it's a nice little thing of stocks that I got with levels on it, take profit levels. Where I've used my analysis, going over specific examples on um, some things to do. So hey guys, give me a hit that thumbs up, help the channel grow, share the video, and if you choose to trade something off the list, be careful with your own risk, and do not trade more than you can afford to lose. And be, these aren't trade recommendations. These are just levels that I'm pretty good with Fibonacci, and I can see patterns on stock charts. And so, and I could sit down and just run through charts and, pick up trades and stuff like that. And it's fun to me. So, hey guys, I hope you got something out of it. Once again, I'm out. Peace.